Every 4 years, in the month of July, Bitcoin repeats the same exact pattern. It goes unnoticed, it goes unrecognized, and then it takes the world by storm. Do not let this happen to you this time. Take a look at the facts. July 2013, Bitcoin did this pattern right here. And then 4 years later, July 2017, it repeats the exact same pattern. Fast forward 4 years later, July 2021, guess what? Bitcoin did the same exact move that it had been doing all of the prior years. Well, guess what? Here we are, July 2025, and guess what? Bitcoin is on the verge of magically, mysteriously, under the radar, doing the exact same move. Don't be surprised. Don't let it shock you. You need to know what is about to happen next. Let's get into it. Welcome. I'm Steve. Here we deliver honest, sponsorship-free TA with genuine value. Subscribe for a no BS approach that actually helps you. Subscribe. So here we are, Bitcoin US dollar index, and today we're on the monthly chart. On the monthly chart, you will see 4 distinct boxes. Each box represents July of that corresponding market cycle. We start our journey in July 13 with this box. 4 months later, July 17th, and you get it July 21 and July 25. We just have 4 distinct boxes. And as you're looking at the chart, something is probably going off in your brain as we speak. You may start to see the patterns that are repeating, and you may start to understand what could potentially be right around the corner. But let's not get too far ahead of ourselves. Let's go back in time to 2013 of where this all started. So here we were, July 2013, and we just had an astronomical run-up. We had a run-up of undocumented times in Bitcoin's history where it was just absurdly on fire. This was the early days of 2013, where basically back here in the month of December going into January 2013, Bitcoin was at about $12. And it rose from $12 up over $270 in just the matter of a few months. It's safe to say Bitcoin was on fire and it needed some time to consolidate. Those types of rallies are not sustainable for the entire market cycle. Typically what happens after a market cycle such as this, where just in a few months we go from $12 to $250, there is a time of multiple months of consolidation where the market needs to really healthily build consolidation, build structure for any future rally to be relevant. Otherwise, those future rallies will fall apart and we'll go back to ground zero. This was really healthy. In the month of April, we started to have our cool down period. And as we start to zoom in, you can see these are monthly candles, right? And that first month, you can see price went down, but we were still hot. In that second month, it was a bearish candle, but the market was still holding steady and building very healthy market structure. And then you can see the month of July. This was the turning point, and this was the candle that said to the market, hey, get ready, because this whole consolidation thing, it's taken a turn. The market was consolidating during these months, but this July candle had that wick way to the downside, and it printed this bullish hammer candle, right? Where you can see the open and close making this hammer, and then this long wick to the bottom, showing that the market had fallen in price down here. However, it was bought back up. And then it closed structurally at a beautiful level, which is the top of the body of March 13, was the bottom of the body of July 13. Very, very healthy. And this was kind of our turning point. No hype, just facts. Subscribe and relax. Picture July 2013 in one little phrase, turning point. You can see it clear as day. From there, we had a turning point, and we didn't really break structure until this kind of like September, October-ish area where we finally broke structure and went to our new all-time high. But make no mistake, it was just a handful of months from this July period to our market cycle top, and July was the turning point. Now, let's go to July 17. What did we learn? Well, July 17th was more of the same. We had this huge rally upward with this biggest candle back in May 17. Okay, May 17th actually went all the way up to 2,800. For those of you who were watching crypto at the time, I was literally covering it back on a live platform, right? Before I even went on to YouTube. I was covering crypto at this exact moment, and people freaked out, right? Because the market had gone from, roughly $500-ish all the way up to this 2,800, and people were like, oh my God, this thing is going straight to the moon. But it was too much too fast. You can see that this was the biggest green candle in memory, right? None of these green candles were as big as this one. That's not an opinion, that's a bona fide fact. And because of that, the market needed to cool down. Because it wasn't the rally that it was in 2013, we didn't go from $12 to $250 and we need a whole bunch of months to recover. This was a slower methodical rise, but it still needed to recover, but not as many months of recovery. And we had this pivotal candle here back in June, and July was clearly the turning point. Look at the chart. We can't make this up. You can see this candle in May went up hot, went up high. We needed to consolidate. In June, we did. Then we needed to have a turning point in July, which we did. July also printed some sort of a similar candle to that of a hammer candle, which is the same type of candle it printed 4 years earlier at that exact turning point, which it had a long wick to the downside, meaning price dropped all the way down here, but then it was bought up. Anytime you see a long wick at the bottom, it means one thing and one thing only: momentum to the upside. Same is true for this candle in September. Long wick to the downside, also a hammer candle. It just meant that, hey, we had a little bit of consolidating, but this is the turning point. The consolidating is over and we're out going to the upside. Also true, July 17, not only was it a turning point candle that it was like, hey, that consolidation phase that we've been doing, this little cutesy phase, this is done. We are finished and it's a turning point. And it was only a handful of months from that point to the market cycle top. Right? How many? 1, 2, 3, 4, 5 candles. How many candles was it in 13? Well, 1, 2, 3, 4. 4 candles to the top in 13, 5 candles to the top in 17. Both of them turning points, both of them relatively hammer candles, both of them bullish reversal candles, and both of them to the upside. All of the same patterns. Now, we go to our next cycle. 2021 brings us to this candle right here. What we can see is that what happened prior? Well, what happened prior was we had this absurd rally. Sound familiar? That's what happens every time before our July cycle. So we had this absurd rally that went from about 10K up to 70K. And what did the market need to do? The market needed to cool off. It needed to consolidate. It hadn't built any healthy market structure from the prices of 10K all the way up to 70. No market structure there, which came to bite us in the butt later. But we finally went to build our market structure. And when you look at it, the same thing comes very clear. The July candle was one thing and one thing only. Take a look. You can see the top was at 70K, and from there we started to fall. We had this huge bearish engulfing candle print in May. We had this sort of recovery candle in June, and then we were still in limbo. 3 red candles in a row. One was a huge bearish engulfing, and one was kind of this limbo candle where it was sort of a tug of war with the bears and the bulls. And then boom, July candle on the radar every 4 years, right on time, right on schedule, and incredibly reliable. No hype, just facts. Subscribe and relax. We needed one thing to happen in the market. We had 3 months of a bloodbath. We had fallen off the cliff. Nobody knew what was going on. And July came to save the day, because what does July do? July's the turning point. It was the turning point candle, and you can't make this up. Look at it. This time, not technically a hammer candle, but same characteristics. We had a huge lower wick to the downside, which suggests to the market we had fallen in price all the way down to this beautiful market structure of this high of the December 20 candle. Became the low of our wick here, which was at about 30K. In other words, we had this huge crash from 70K. We started to consolidate. July was the turning point. July had a huge wick to the downside, which suggests to the market that it has momentum to the upside. And we printed a bullish engulfing candle. So it was a win. It was a double whammy. And that thing started to spiral to the market cycle top. And guess what? It was 1, 2, 3, 4 months to the market cycle top. So in the 3 cycles we've had so far, 2 of them were 4 months to the market cycle top, and 1 was 5 months, and all of them were a turning point, and all of them were a bullish candle, and all of them were after a large move to the upside. So what do we see now? Well, let's look. 4 years later, right on time, right on schedule. What do we see? Well, we see a market that had really risen from about 50K up to well over 100K in a short amount of time. And when it did so, the market needed to recover and the market needed to consolidate. And most recently, we've had a move from about 70K up well over 100K to a new all-time high. And that's the move I really want to dig into, right? We can look at this as one big move, which again, it goes into consideration with what we projected in our last video, that what we're seeing is sort of a prolonged distribution phase near the top. I introduced Exhibit A, which is just proof. Look at these rallies. Look at this consolidation. It's building key market structure for future runs, future bull markets and future bear markets of crypto. This market structure is incredibly important to the health and wellness of crypto. But if we zone in on what's recently happened, you go to the 75 and you go up to that new all-time high, the market needed to slow down. The market needed to consolidate. And ideally, it wanted to build structure on top of our other consolidating point, which was here. Okay, that's what the market is going to try to do. It's going to try to build key structure on top of some key levels from our prior run, and it's going to try to build that momentum. And that's what I want you to see as we get into and really get deeper into July, and especially as we move starting into August. I want you to keep this in mind, that July has one thing and one thing only. It wants to be the turning point. Will this time be the turning point, or will it be different for Bitcoin? And furthermore, is it going to be precisely like it's been so far, with 4 to 5 months after the July candle prints, 4 to 5 months right to the market cycle top? Will these patterns repeat? Let me know in the comments down below, but I need you to be ready for all of these facts. Hit that subscribe button. This bull run is our road to 500,000 subscribers, but I need your help. Today, tell one person about our YouTube channel, how we spit facts, go against the herd, take no paid sponsorships of any kind. Road to 500,000, let's go.